What is going on, guys? My name is Alex, and this is the Equity Odyssey podcast. And today I have the pleasure of getting to interview Joe Archbold. Joe is the owner and founder of Anthem Investing and, has an awesome story. Started with, zero, then 1 unit, and now all the way to 1,100 units and over 15 years of experience in the real estate world. So super excited to have you, Joe.
Thanks, Alex. Thanks for having me on your podcast.
Yeah,
Appreciate it.
absolutely. So we usually like to start off with the backstory, how you got here, how you built what you built, right? So can you give us a background on how you got started?
Sure. I think like everybody, once you decide you want to participate in real estate, it's a matter of just taking that first step. For me, I acquired a small home. I finished school and had enough money and bought a real small home. I think it was before it became vanity and they called it house hacking. I just realized I couldn't afford to live in my home on my own, so I had a roommate and shared a small home with a roommate and literally became what ultimately became my first tenant. And although after we sold that and I got married and did all that stuff, when I circled back and realized I wanted to be in real estate, I had a little bit of understanding what it looked like to be a landlord. And so when we bought our first unit, I think we bought a 3 unit just about 14 and a half years ago. And then we bought another 3 unit a few days after that. And we accumulated 30 units along the way. And really truly stepped in, became very active as a owner operator.
Awesome. So you got the first one, just regular like owner occupied loan, and then started house hacking. And then how did the next couple 3 units come about? Did you just do the traditional route or how'd that go?
Yeah, it was later in life, right? So I had W-2'd for a long time. I had a 401k, and um, in my industry, we were in the tech space, so I knew the semiconductor space pretty well, and had tried quite a bit of investing in real estate or investing in the semiconductor space, and that was hit or miss for me, and it was just very involved. I realized and connected with a buddy that was a broker. He was uh, buying and acquiring investment assets for himself, and he was managing them. And so he became a bit of a mentor for me to lean in and really try to understand what it would look like to acquire a multifamily unit. A single family didn't make sense to me. And so I thought jumping into something where at least you had a few renters made a little bit more sense. And he gave me a lot of guidelines and really enabled me to understand what it would look like to step into a 3 unit. So we did. We bought one, and pretty quickly thereafter, we were able to buy another one on a deal that kind of unwound, and he presented it to me. So we went and looked at it, and my strategy was to acquire as many assets as I could that were in my zip code, or at least as close to my zip code as possible, so that I could manage them. Because I think what people don't realize, once you decide you're going to step into acquiring a multifamily asset, for sure, you're really buying a small business. You've got tenants that are now your responsibility. You're really in the service part of that business because you want rent, but they expect that the place is clean, neat, safe, and all those other things. So it kind of takes you down that path of being responsible, and it turns into a 24-hour kind of a job.
Mm-hmm. Awesome, awesome. What were some of the biggest things that mentor helped you with in that journey from that 3 to 30 range?
Yeah, it was just making all the little decisions. As soon as you acquire a small unit or a small asset, it's where do I build a lease? How do I manage the lease? How should that be structured? And just really kind of going through all of the things that would keep a lot of people from just going, it's not worth it. I don't understand it. I think once you step in and you just say, I'm going to do it, is a great first step. But I also know a lot of people that don't do little things like building escalations in their lease. So their lease increase doesn't happen on a yearly basis, where you build an escalation in and you tell your tenants when they move in that there's going to be a 4 or 5 or 6% escalation every year. They know that at the end of the year, their rent's going up. And so
Mhm.
there's a lot of little things like that you learn along the way that clearly make a difference. And but it doesn't matter how efficient you force it or how efficient you work to make it. You go from 1 unit to 10 unit to 30 units to whatever. It just takes more and more of your time. more and more little things happen. You're managing a bigger network of tenants. I think what I found along the way that was probably the most, I'd say the most challenging for me was just all the little things that happened that just demanded my eyeballs. It didn't matter how efficient it got. When I started, you went and you knocked on doors and asked for the rent. And now today, literally 90% of my rents come in electronically, either through Zelle or Venmo or an app of some kind. And so although it's gotten much, much easier, the big issues, problems, and challenges continue to happen. And they never happen when you're planning. It's the stuff that happens in the middle of the night. I'm in the Midwest, so we have heating season and a cooling season that always bring challenges.
Yeah, yeah, absolutely. All my the majority of my rentals are in the Midwest as well, in Iowa. So I get that. There's always a furnace not working on the coldest night. That's just classic, right? So
Yeah, yeah, we're getting ready to, we haven't had any bad weather here and at least yet. And we'll always get to that stretch where we have just a horrible stretch of ice cold weather. And I'm sending notes to tenants to, hey, open the cabinets just so the pipes don't freeze.
right. Yeah, I've had broken pipes, all that fun stuff too. It's great, but awesome. So that mentor really helped you with just like the technical, like blocking and tackling, like do this here, that thing here. I think that's actually huge because like you said, there's like 150,000 like little things, right? That you have to kind of go through and like trip and stumble and mess up. And if you have somebody who can just be like, no, 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 just step where I step and just follow me to do this. I think that's huge. And that's awesome that you had that. Um,
Yeah, I took the approach when I was working with this guy. I mean, he made money by buying and selling assets. So I told him that my agenda, my strategy was to acquire as many as I could. And so we just created a search for anything that was a 3 or a 4 or a 5 or a multiplex that came on in like the 3 zip code area that I wanted to see it. So that
mhm.
I could first of all see what these assets looked like, really try to walk through them. And so he would send me these listings and I would drive by them. We try to make the decision of whether or not we would want to go see it. And just like at this point in 2 of the zip codes that I have my assets, if a 3 unit or 4 unit came on, I literally saw it, walked through it, drove by it, and we kicked the tires on it,
Yeah.
or we bought it. So
Awesome. Awesome. So just aligned incentives, right? He had some experience, he's you working with you. So that's awesome. Um, okay. And how did that transition go from, just buying personally those 3 units, a couple multi stuff like that? How did you transition into, something larger with maybe syndication or what was the next step?
yeah, that was exactly it for me, was to step in and start participating in syndications. I'll tell anybody there's no wrong way to get into real estate. You can be as active as you want and acquire an asset and have them give you the keys. The other interesting opportunity for people is to participate completely passively as a limited partner, and that's via syndication, where you're involved with a group of people that are acquiring an asset, and they literally give the keys to an operator who's got the experience to run that asset and provide a return that makes being involved in that worthwhile. And that's really what a syndication is. I was at 30 units struggling to try to understand, where do I take my next step? How do I leap from 30? And you hear guys on podcasts and all over the internet that are running and controlling thousands of units. The only way they're doing that is through some sort of partnership. If you look at what, let's say, a 200 unit asset values at, well, if it's $200,000 or $180,000 a unit, you're talking about a $40 million asset. So the amount of money it takes to control that asset is pretty significant. And there's very, very few people that physically own those assets on their own. They're generally involved in some sort of a partnership. And that looks like a syndication. They're either on the general partner side or they're on the limited partner side. And the
Mhm.
limited partner side is a way to leverage the expertise of somebody who's already in that market, already runs, controls, and is managing assets, and bring your money alongside him and get a significant return. That's
Mhm.
the way I look at a syndication. That's how I got involved in syndication. I literally ran into a guy and I said, hey, I want to get beyond 30 units. And he told me, you got to go big or go home. And that resonated with me to the point of going back, and I took a different approach. A few years back, I got my securities license and joined a broker-dealer team. So our group, we were able to physically bring and evaluate a whole bunch of different assets. So we were looking at self-storage, we're looking at industrial warehouses, and we're also looking at large multifamily complexes. So big operators come to groups like ours. They're looking for us to help them raise capital so they can go acquire additional assets. We take these, we invest in these assets, and we bring these assets to the investor network to give them an opportunity to evaluate these themselves and decide if they want to invest alongside us.
Gotcha. So you're like acting as a hub, investors come to you and deal finders kind of come to you as well, and you invest in these, kind of connect and make sure everything operates correctly.
Sort of, right? So as a broker-dealer rep, I'm part of a broker-dealer. So a broker-dealer it kind of brings compliance. We bring a whole bunch of other things to a syndicator as they're looking to try to acquire an asset. Most of these operators or syndicators, when they're looking to acquire an asset, they may have an opportunity to acquire an asset, but they may not have all the funds that they need.
Hmm.
And like anything, when they go to acquire that asset, they've got a very, very short amount of time to ensure that they've got the funds to to get the down payment done, and to also plan for renovations and capital expenditures to acquire an asset. And that's how they end up approaching the limited partner network or the individual investor community. They can sometimes, they can obviously leverage funds differently. They can bring in other partners. They can bring in another key partner, and he may bring in a ton of capital as well. But for the most part, if they go to the retail channel, they're looking to the individual investor network, and their network may only be so big. They'll come to a broker dealer team and say, "Hey, we want you guys to raise $5 million for our project." We'll evaluate their project. Well, if it's a group we've already worked with in the past, or if it's a brand new team, we'll try to understand who they are and what level of experience they have, and try to make a decision as to whether or not we want to take it to our investors to participate.
Yeah.
But that's quite literally how I went from 30 units to over 1,100 today.
Wow.
I just recently joined a project leading some self-storage through the Midwest, and looks to be another pretty interesting opportunity.
Awesome. And what are some things that you use to determine which operators or which deals you do end up investing in?
Yeah, so a lot of times we'll look at how many deals they've done. We'll see if it's a market they already know and they already operate in, right? So it's pretty difficult to want to take a project to investors, and it's really the operator's first time or it's their second time. Some of the groups that we've worked with have had $1 billion in transactions. They know what it looks like to acquire an asset, bring cash flow to investors, and then provide them a significant return when they sell it in 3 to 5 years. If you look at a syndication versus the traditional path, you acquire an asset and you build a strategy of how long am I going to own this for? What value am I going to generate, or what revenue am I going to generate? And what does that look like for me if I acquire a 2 unit, a 4 unit, a 6 unit, or an 8 unit? But if you look at a syndication, the strategy that these guys, it's really almost a slow fix and flip. They'll put a strategy together they'll acquire the asset, and on day one, they're trying to decide how they're going to reduce their expenses, how they're going to increase rents. And so there might be a strategy to take an asset in a good market, but it's an older, what they would call a vintage or a classic asset, and meaning it may still have carpet and formica. And so then their strategy, they'll spend $10,000 or $15,000 per unit to renovate those, knowing that they're going to take rents from, whether it's 1,300 to 1,500, 1,500 to 1,800, and they know because they're already operating assets in that market that they can drive those rents, and that they can, at the end of the day, have an asset that is worth significantly more money. So investors get cash flow, and at the end of the day, when they sell this, they're gonna see a pretty handy equity shot. So we're looking at assets today that are bringing between 1.8 and 2x equity multiple, meaning if someone's invested $100,000, there's a very good chance they're going to have $200,000 when this project's all done. Or if they invest 50, it'd be 100. So kind of So we look at operators in a couple of different ways. We look at do they perform in that market? Have they already got assets there? How long have they been doing it? And then we'll do some due diligence on just look at their background. Sometimes in the past we use a financial analyst to kind of go through their pro forma numbers and just see what their anticipated plan is. Is it realistic that they're going to raise these rents to this point? And just look at a lot of different things in the due diligence side to understand if it makes sense to participate in that opportunity.
Right. Awesome. So you're looking at experience and checking their numbers and you kind of just taking the whole thing and seeing if it makes sense. Awesome. And you mentioned little self-storage. Is it mostly just multifamily units, or what asset classes do you guys consider?
Right now, we're looking at primarily multifamily. I think we've probably done mostly multifamily. We've got a couple of different operators that are in the self-storage space that we've engaged with that are very, very large operators and doing some unique things there. And pretty recently, we've connected with a group that's doing triple net lease backs for industrial warehouses. And so just had recently did a project with them, and we think we'll anticipate to do more. I think from our perspective, if somebody's going to come to us and we're going to form a relationship, it takes a lot of work for them to go to the SEC and then also go to our broker dealer, bring all the documentations that they need, because they'll have their PPM, they'll have all of their other documents that they've supplied to the SEC, and they may need to modify some of those to go through our broker dealer, and for us to be able to share these documents with our investor network, we've got some compliance issues there, and so we look for it to be more of a long-term relationship. We don't want to do a one and done kind of a project with somebody. Most of these operators, they're looking to at least do a project a year, or at least a few projects a year. And if we can engage with them and have a long-term relationship, we like that. We think our investors like that.
Right. Absolutely. That's awesome. Um, when you're looking at, you know, two questions, I guess. When you're looking at sourcing deals and then also sourcing investors, what are your main channels for finding each party?
Yeah, it's an interesting question. I'll have a lot of people come to me. So I'm not really on the opportunity focus side. We'll generally, like the network of guys I'm working with, we'll look at an opportunity and they'll kind of throw their hands up in the air. Hey, here's an opportunity, or here's if it's a new opportunity with a new operator, we'll talk about how we're going to vet that and really kind of understand them. We'll get on a call with them. They'll share some information about their project, their team, and where they're headed, and we'll make a decision if we're gonna work with them. If it's an operator that we've already done stuff with, it's pretty straightforward. We're looking at an operator who's acquiring another asset right down the street from an asset they're already operating. So they've got the inside track and they really understand that market and all of those things. And so a lot of it's just the timing. Like we have an operator that's going to do a project in Dallas. Somebody comes to us and say they've got a project in Dallas. That's tough for us to say we'll take that deal on because we just don't, it kind of turns into a conflict for us.
Mm-hmm.
And then as far as connecting with investors, it's things like this. I haven't podcasted a lot. And so it's kind of a new outreach for me in the way of just trying to connect with investors who either want to learn more, understand what it looks like to either be a active investor or a completely passive investor, and what that looks like and what you get.
Gotcha. Awesome.
I think either way, the juice has to be worth the squeeze.
Right. Totally. Awesome. What is, when investors come to you and they're interested in investing, what's the number one reason that they don't invest, or the number one thing that they're afraid of or holding them back?
Sure. I think in this climate, I think people have heard a lot of press. There were cash calls on opportunities over the last few years, and so the interest rates and some of that news has made it pretty challenging, and certainly in the multifamily space. Yeah, I think coming out of out of COVID, it just created a lot of challenges for our market. But now what we're seeing on the other side is that the operators that we're working with are buying and acquiring assets at deep discounts, 25 to 30% discount from an operator who's already done a bunch of work. And so it's a unique time for investors to participate. I think additionally, the stock market's at all-time highs. So I think there's either people that are already involved in the stock market and not pulling that money out. There's a lot of money sitting on the sidelines. I think if it was the second quarter or third quarter of this year, we saw private equity money coming into private assets reach $100 billion a quarter. So the money's there, but there's a lot of what they would call dry powder out there. A lot of people looking at opportunities and just trying to decide if it fits them or suits them.
Mm-hmm.
But we'll share as much information as we can with investors. If somebody wants to see what one of these opportunities look like, we'll share a retired project to give them an idea of what kind of documentation becomes available to them, and really give them an understanding of what it would look like if from that participate in that. Right? I mean, some of these will provide between 6 and 8% cash flow on a monthly basis, annualized, but on a monthly basis. So at least you're getting cash flow, and that cash flow comes to you right directly into your checking account. And then in a 3 to 5 year timeline, they're building equity along the way. They sell that asset. A lot of our operators are providing investors the opportunity to 1031 that money into another asset.
Mm-hmm.
And so, you can quickly compound their capital pretty
Right.
handily.
Right. That's awesome. That's awesome. Just kind of roll it into the next deal, let it do its thing again. So
Sure.
awesome. So investors come to you and they're maybe concerned about, COVID or interest rates or things like that. But it sounds like you guys are, you have solid operators, you're buying at enough of a discount where it's just, if the numbers still work, the numbers still work. Is that kind of what I'm hearing there?
Sure, the numbers have to work. And, now we're seeing people that are acquiring assets in markets where they're getting tax credits and things like that to keep rents at a certain level, have some that are considered low income. And there's a lot of guys just, participating in the market in some unique ways to take advantage of where we're at and continue on. I mean, I think we're seeing this last year, I don't know if we did 4 deals. The year before that, we had probably 6 opportunities that we pushed out to investors. And investors can go right directly to these operators. They can form a relationship with these guys. But if an investor is looking to, when you have capital and you want to put it out into the market and really start evaluating opportunities, working with a group like us, you'll be able to see 3 or 4 or 5 different opportunities annually. If you go directly to an operator, maybe you see an opportunity come from them once a year.
Right. Much less volume.
Yeah,
Also,
and we also provide another set of eyeballs, right?
yeah.
We'll do our own due diligence, and we'll talk about why we're excited about it, why our group's evaluating it, and why we're investing in it. And investors don't necessarily invest with us; they just invest alongside us. So even though we're promoting it and we're working with the operator is the one who gives us a little bit of funds to participate in it and to bring them investors.
Right.
Investor wants to sign up and go work through us and fund a project, their money goes right directly to the operator. The agreements that they sign, the PPM and the operating agreement, they sign those documents right directly with the operator.
Yep. Gotcha.
Their metrics are exactly the same as if they went right directly to the operator.
Awesome. Okay. And are you guys mostly in the Midwest area, or where are you guys' majority of your
I'm the only guy in our team that's based in the Midwest. We're based across the country. We've got a guy in Texas, so if we have an opportunity in Texas, he'll generally go and walk the asset, look at it, and be boots on the ground there. And depending on where the asset is, we try to have somebody go and physically look at the asset and do some of that work. But we're involved in assets through the Sun Belt, Arizona, Texas, Florida, into the Carolinas, and the self-storage stuff we're done that we've recently got involved in was through the Midwest, Oklahoma.
Awesome.
So all over.
Yeah. Do you have any predictions for where the market's heading, maybe in the Sun Belt or the Southwest?
Yeah, the numbers are interesting to look at. I think the migration of people there and the job growth through the Sun Belt, it's unstoppable. There's so many people that are there and so many people that have migrated there, and it's they can't build fast enough. And I think the interest rates where they were made it very, very challenging for developers that were going to put a shovel in the ground, and that's obviously going to change. But the demand for there's still a pretty significant shortage for homes. They keep talking about um, uh, what's they keep talking about the rents coming down, and that I think they're coming down from where they spiked. And I think excuse me, I think that in these markets we're just going to continue to see demand. I mean,
Hmm.
it's purely economics. I truly believe it's just economics. It's supply and demand, and um, there's a lot of people that have migrated to the south. But we hear more and more about the Midwest and people finding unique ways to participate here. We
Right.
did a project with some guys that were consolidating a whole bunch of mom and pops, 20 and 30 unit assets throughout Michigan, and put a big project together. This was more of a fund, so it wasn't a single asset, and they pooled a whole bunch of assets together. But their strategy wasn't necessarily to do a bunch of renovation. It was really to solve some of the expense side from all these mom and pop operators that just really couldn't take it. They didn't have economies of scale, and so they were able to do some of those things in a unique fashion. So I think there's a lot of different ways with most projects. It's the story behind the why. And I think from our perspective, um, a good asset being run by a bad operator may end up with challenges, but a mediocre asset run by a really good operator, it's gonna perform.
Hmm.
So
Awesome.
so the operator is certainly key.
Yeah, yeah. That seems to be a theme that I hear a lot of people say. It's like when you're doing due diligence, number one is the operator, not even the property, right?
It
But we do
it
due diligence on the operator first because of how
it it,
important it
it,
is.
it really is. We truly believe that.
Yeah. Awesome, awesome. Um, okay, well, very good. What does the future hold for you? What are you guys, what are your goals, dreams, ambitions? Where do we go from
Yeah,
here?
more of the same. I mean, I think from my perspective, had I gone down this path sooner, I probably would have sold out of all of my assets that I own and manage, and really truly just be 100% passive. And that's kind of my strategy now. So whether it's selling my assets, whether it's pulling the equity out and redeploying that capital, I think I'm much further down the path for participating passively than doing another deal where somebody hands me keys.
Hmm. Right. Yeah, I never thought I'd be as interested in passive investing, but trying to run a business and then you have this portfolio, which is also definitely a business. It's like, holy cow, right? It's just time, lots of work, right? So the
Yeah,
passive thing is starting to be more attractive.
yeah, and it's a little thing. I mean, I'm sitting with my family, for instance, on at Easter, and I've got a tenant calling me that they smell gas, and I said, well, first of all, call Nicor, but it's a multifamily unit, and then I got another tenant that says they're smelling gas, so I literally pack up from dinner and head out to go see what's going on to find it's a a a, a, a burner on a stovetop that's that's just having a challenge. So, it's just those things that you just can't plan for, that take your time, that you can't account for when you're operating and you're on your own. I think if you get big enough and you decide you're going to pull in property management, that was just one of those things that never really truly worked for me, was to bring in somebody to do property management. I mean, especially now, I find it a little more difficult in that all the rents come electronic. So what value are they going to provide? Well, I guess they're the guys that are going to show up when there's a problem. And maybe there's value in that. For me, I just never explored it. And,
Hmm.
you know, but either way, I think there's a lot of people that are sitting on the sidelines waiting for some perfect deal. And I don't know that there's a perfect deal. I think there's good deals. You look at them all like they're a small business, and there's somebody mismanaging them, and they're aging out and they just physically can't handle it anymore or don't want it. And so there's always buyers and sellers, and I think that applies to these large multifamily deals. Some of the deals that we see have been run by an institution. Maybe it was maybe it was an insurance company that held this asset for long enough that they just realized they wanted to be out of it. And so they're selling it. And it might be a 200 unit asset in a great market that literally has that looks like a time capsule. It hasn't been renovated since the mid 80s or the early 90s. And so, for an operator with experience to go in and renovate these units, increase rents, solve some of the expense challenges, and provide a pretty handy return to investors is a pretty easy. It's an easier path for me, I believe.
Sure. Yeah, and a huge opportunity.
And what people don't realize with a syndication, you have the same tax advantages as if you bought the asset yourself. And there's a lot of ways to participate in real estate, whether it's through ETFs, REITs, and things of that nature. They do not provide the level of tax advantages as participating, even as a limited partner in a syndication.
hmm Yeah, that's a huge advantage for a lot of people looking to lower the tax burden.
Yeah, and I think long term, right? So when you have a long term view of how you're going to participate in real estate, if you acquire them yourself, you'll always have that. You're going to have a K1, and your K1 will provide some tax advantage. When you get involved in a syndication, certainly in multifamily, your K1 is going to show a pretty significant paper loss, because the first thing that they're going to do is they're going to do a cost segregation on the asset where they can accelerate some of the tax loss on some portions of the asset,
hmm
appliances and things of that nature. So you on your K1, when you invest as a limited partner, you'll see, even though you're generating cash flow, you'll see a nice passive loss. So
Yeah,
it offsets some of your gains for sure.
totally. Awesome. One of the perks of real estate, right? So, so, well, very
They
good.
probably do to some certain extent.
Yeah. Yeah. If people wanted to reach out to you, they're curious about investing, or they have a deal or they have some money they want to put in a deal, how do they find you?
Yeah, a couple of different ways. They can go to my website, antheminvesting.com. If they want to go to a landing page and give me a little information and want to jump on a call or get into a conversation, learn a little bit more about syndications, you can go to www.growincomeforlife.com.
Awesome. 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 And before we sign off here, did we cover everything that you're hoping to cover on the podcast?
Yeah, I think so. I mean, I would just encourage anybody that's looking to participate in real estate to either get in a group,
hmm
connect with a broker, and start a basic search for what does it look like to start evaluating a 2 unit, a 3 unit, a condo, whether you're going to fix and flip or whether you're going to whether you want to be a landlord. And those are an interesting alternative. But additionally, I would say if you're busy and you want to have your free time be your free time, then you should consider the path of becoming a limited partner, what that looks like, how you participate, and if these opportunities fit for you.
Awesome. Awesome. Well, if anyone's interested in that, certainly reach out to Joe. And Joe, is awesome having you on. I really appreciate your experience and your expertise and all the knowledge you shared.
Yeah. Hey, thanks a lot, Alex. I appreciate it. Thanks for the time.
Absolutely. All right, you guys signing off.
Take care.